Good morning, folks, and welcome to Swing Trading today on a Friday, which I rarely do. But yesterday I played a little bit of hooky. I went out to the Hamptons and Montauk to spend some time with my dad, and I wasn't completely in tune with Jay Powell and his virtual meeting yesterday. But a lot of people on Wall Street are looking at net his message as being something new. It's not new. It's not new. The message out of the Fed chair yesterday was that he was willing to let inflation run hot. This is not new. This goes back to a statement. I said this years ago when Janet Yellen let it slip when she was still in the Fed chair position that she was willing to let inflation run hot. That was foreshadowing. She was giving us a glimpse of the future back then. Was it innocent honesty on her part? Maybe. Or maybe she was just putting a little golden nugget. And I'm using the word golden for a reason because we're going to go to a chart in a moment of gold. And I was wondering why I took it on the chin yesterday. But that's all changing this morning. Now, let's talk about what Jay Powell had to say yesterday. And this is not new, but they're treating it as if it is new. On price stability, the FOMC adjusted its strategy for achieving its longer-term inflation goal of 2% by noting it seeks to achieve inflation that averages. That's the operative word, that averages 2% over time. Over time, what does that mean? What does that mean? Is that 2 years, 5 years, 10 years, 20 years, 30 years? I have no idea. I have zero idea what that means. So do we let inflation run at 10%, 15% for 10 years and then have it drop down to 1% for 20 years? I have no idea. This is an open-ended gun pointed at the head of the U.S. consumer. If you're not upset, you should be. If you're not ready, you should be. And we're going to talk today about how we get ready for what is coming down the pike, and that is inflation. And I've been talking about it for a long, long time. Whether I have been talking about the breakout recently, this is most recently, the DBA. This is agriculture. Agriculture is moving up higher. If you're not exposed to agriculture, food, a necessity, you need to be. Agriculture is on the verge, this is a monthly chart, getting ready for not its first breakout, but its second breakout on a monthly basis. This is a chart that wants to go higher. We're along of an egg company called Cal-Maine Foods. Why are we long of an egg company? Because it's going to go a lot higher. It's down on the month. We have a ton of overhead supply above. They announced a secondary offering last week. This week we're stabilizing. But here's the trend line you want to watch out for. If and when we break out above this upper band of resistance and close there on a monthly basis, and we get above this volume shelf, Cal-Maine Foods is going a lot higher. We've been talking about gold. We've been talking about gold since it was uncool, way before it was uncool. Down on the month. And it was down yesterday. But what's it doing this morning, which really prompted me to do this live stream? And I doubt many people are going to join in here because I'm not normally on this early. I have no idea what I'm doing up this early. I was out in the Hamptons again yesterday. I'm probably going to take another run out there again this morning. just to catch the sunrise. So I'm going to do this really quick. The price of gold this morning is surging. We are up 1.6% on the session. We are already long of the gold miners. We're looking to buy more. We are up $31.40 the ounce. This is a beautiful, beautiful 4-hour chart. We have been moving up all night long. We recaptured support, we held it, we retested. Not one support level, but two. You can see the one in yellow and the one in red. We are going higher here. Need more evidence of inflation or fears of inflation? Look no further than silver. Silver ripping up higher, breaking out above resistance. We are up just shy, we're a bit shy of 2% higher on silver. This is the market sending you a signal, sending us a signal that all is unwell with this economy. We're going to go into election season. I'm very confident that equities will rally. I believe that we're going to take a pause on the NASDAQ 100, which is down at current, it was up earlier. I'm not ready to rule out the NASDAQ 100 completely. We have a small short position here. We're going to add more on a failure to hold this breakout. But at current, overnight, we are moving up higher. We are retesting support. If support here fails, the trip Qs are in a lot of trouble. So beware. And if there's an echo on this microphone, I apologize. I need to get a new microphone. Something's wrong. I know my fellow member Pat's going to drop a note and they're hammering me about my echo in the microphone. So I apologize. I'm aware of it. It needs to get fixed. I'm afraid it's my computer because it doesn't happen when I do pre-recorded recordings on my video software. So I'm worried that it's my computer. All right, let's move on here. Need more evidence of inflation. Lumber prices surging. This is a 4-hour chart. Need more evidence? Look at a weekly chart. Look at this. It's insanity. Nobody's paying attention. Natural gas surging. Up another quarter percentage point this morning. Bond prices falling. They fell hard yesterday. Yields are rising. What else do we have here? Oh, we're going to look to short again, Salesforce.com. They're spiking it up yet again today. Good. Great. Love it. Why do we want to short CRM? For the same reason we shorted it the other day. Let's bring it up. Here we go. Click the wrong button. My bad. Okay. Monthly chart CRM. Great company. Great company. However, technically overbought. It's going down. I know there are going to be people out there dislike, unsub. All right. It's going down. CRM monthly chart. It's a beautiful chart for longs. We're trading above the third standard deviation Bollinger Band. In terms of seasonality, I didn't look at this yet. Going into September, valuable data. Up only 25% of the times over the past 5 years in September. Not a lot of data, but valuable data nonetheless. And very important when you consider the fact that we are trading above the third standard deviation Bollinger Band on not just a monthly basis, but a weekly basis and a daily basis. This is why we shorted it the other day. We booked profits pre-market yesterday. Add to that, you have RSI, which is above 85. So, sure, might they squeeze it up higher? Absolutely. Absolutely. I wouldn't be the least bit surprised. Is it going down in the next few days? I have little doubt that it will. And we will be short of it. All right, so I guess this is my I can't sleep. I'm getting ready to go take a cruise out to the Hamptons, Montauk, tirade. And I'm going to go get more coffee to get ready for my ride. And I'm going to leave off with what do I want to leave off with? Let's take a look at the dollar. Oh my God. The dollar is cratering. For those not familiar with the importance of the U.S. dollar, it's significant relative to most commodities, to a lesser extent, natural gas, because we produce so much of it here in the United States. But relative to other commodities, if you're wondering why gold, silver, other commodities are rallying in the face of rising yields this morning, look no further than the U.S. dollar, which the Federal Reserve has declared war on. So beware here, folks. We have inflation on the horizon. It's only going to get worse. And if you're not currently long of silver, gold, join us as we build more in our position of both silver. I'm not long of gold. I'm long of silver and the gold miners. That's how I'm playing the gold angle and agriculture, whatnot. We're positioning very, very strong of these investments to protect our buying power and, God forbid, make a buck in this economy. Everybody have a great weekend. Thanks for joining in, and I will talk to you throughout the day. Members, be well.